I'm Christian Chan, CEO at AssetMark. I wanted to talk to you about some of the market volatility we experienced over the last couple of weeks. We here at AssetMark believe there are three key things to keep in mind. First, market corrections, loosely defined as a 10% decline from the peak, happen about once every other year. The NASDAQ is in a correction, and the S&P 500 may or may not enter a correction, but it's been a while since we've had a meaningful pullback, and we're coming off of two really great years in the equity markets. So while this feels jarring, it's not unusual. Secondly, the foundations of the economy remain strong. Consumer and corporate balance sheets are healthy, and income growth continues to be rather good. What we're seeing today is fear. Fear that consumers and businesses will delay their spending because they don't know what the rules of the game will be. Understandably, it's hard to invest for the future when you don't know what the rules will be, but history tells us that once the rules are known, businesses and consumers adjust, they move forward, and they continue to grow. That's what we saw during 2018 and 2019 during the last round of tariff tensions. Lastly, I think we're only partway through this period of policy uncertainty. So far, most of the changes have come through executive orders and have been primarily focused on tariffs and immigration, both of which have the potential to slow the economy and push inflation higher. That's why we're seeing markets react the way they are. The second half of the year will likely bring pro-growth measures such as potential tax cuts and deregulation. Now, this back and forth negotiation process will be bumpy, but over the course of the year, I also expect it'll be more balanced. Now, market pullbacks aren't selling for everybody. That's why your long-term investment plan is built on diversification across geographies, across strategies, across asset classes, and importantly, it accounts for periods of market volatility like this one. Now, we didn't necessarily predict this correction, but we did plan for it. We'll continue to monitor developments and share updates as we have them. In the meantime, if you have questions or concerns, I suggest you don't turn on your television and don't reach for social media. Instead, reach out to your financial advisor. They've been through this before, and they can help you stay on track for a long-term investment success. Thanks for watching. We'll talk to you next time.